Good afternoon, everyone. We are starting to allow people to trickle into this meeting today. This is Crop Insurance for Organic Operations webinar with Kate Hansen and Joe Toillion. Hopefully, I'm not butchering that too much.
Not
Um,
too bad, no.
yeah, and so you guys, what we'll do is we will go ahead and maybe give it one more minute here to allow people to trickle in. We had over 30 RSVP, so I anticipate people will just be jumping onto the meeting as the meeting is starting, which is totally fine. So we'll give it one more minute, and then after that, I will share a few slides with you guys to deal with Iowa Organic Association. And then we'll move forward to Kate, and then after that, Joe. And for those of you who don't know me already, my name is Olga Redding, and I am the Iowa Organic Association Education and Outreach Coordinator. So my role for, as in relates to IOA is to organize events as the one that you are attending today. So anything to deal with education and organic agriculture, I'm your go-to gal. If you have any ideas on topics or things you'd like to hear or see from us moving forward, please reach out to me. Always happy to learn what you're interested to hear from us. And my email is olga@iowaorganic.org. That's a good way to connect with me. And what I'll do, it's 12:02 now. I'll go ahead and share my screen and tell you guys about IOA a little bit. So just 1 minute here. All right. So let's go ahead and move this. All right, guys. Thank you, everybody, for joining our workshop today. Iowa Organic Association, who we are. We are a nonprofit organization. We have been established in 2006. We are committed to organic education, advocacy, and community cooperation. Our mission is to advance organic agriculture and food systems in Iowa. And our members are a diverse community of Iowa's farmers, gardeners, food and farm businesses, advocates, and consumers who are champions for the organic movement. What our priorities are listed on this page. So the top priorities are education, outreach, advocacy, and community. As far as education, we provide programs, expertise, and information to help expand and diversify the organic opportunities in Iowa. So anything to deal with education, I am in charge of, so feel free to connect with me on that. But some of the things that we have done for the past years are the Growing Organic Expertise workshops. These are technical trainings across the state. We just got done with a round here in February. We had 4 workshops in 4 different areas of the state. We also have created the Midwest Organic Pork Conference that was launched in 2019. That was the first and only organic pork conference of its kind. So we are proud to have been able to do that. And of course, in March of 2020, we were going to create our first organic pork conference, and that ended up being canceled due to COVID. So we ended up collaborating with Moses, and we presented some topics from our 2020 organic pork conference this year through Growing Stronger conference. We also do on-farm field days, webinars, and online resources. Again, due to COVID, on-farm field days have kind of been, put on pause. So hopefully we will do something in person this year. However, that hasn't been determined yet. Outreach, we connect with target audiences and the public to promote research, events, and resources that are beneficial to the organic community. As mentioned, we participate in conferences, trade shows, community events, and of course, some of these things you can find on our website via our e-news, our calendar, social media, our IOA listserv, and of course, directly contacting us. So if you are not already subscribed to some of these things, feel free to do so. To that point, today's workshop, today's webinar will be recorded and added to our Iowa Organic Association's YouTube channel. So you're not already subscribed there, please go ahead. We always update awesome content over there. Advocacy. We advance state level leadership policies dedicated to funding support towards Iowa's growing organic industry. We develop relationships with policy leaders, mobilize advocates and stakeholders willing to advance organic interests. And then, of course, community. We are here to encourage a culture of collaboration by connecting organic experts, stakeholders, and resources to strengthen Iowa organic community. And, if you are someone that is potentially looking to become an organic farmer or have anything as it relates to organic questions and need help finding those resources, we are here for you for support. And in addition, a huge resource is actually our Iowa Organic Resource Directory. And this resource directory is available on our website via a PDF file, so you can access that under our resources tab. It was developed to provide organic and transitioning farmers a wide range of resources to help encourage widespread success. This directory has over 900 businesses, nonprofits, educators, and service providers that are related to the organic industry. It serves as a valuable tool for Iowa's organic community to achieve growth and continued success within the organic industry. And in addition, you guys, this particular directory is available in a paper format. So if you guys are the type that are the sensory type that like to look at a booklet instead of sifting through a PDF, I would be more than happy to mail one of these directories your way. So just connect with me via email or even chat through Zoom, and I'd be more than happy to send one your way. Of course, as a nonprofit organization, we rely heavily on your support. Definitely consider becoming a member. Your support means more than words can describe. So you can obviously find information regarding becoming a member on our website, which is iowaorganic.org. Always connect with myself or Roz, our executive director, if you have any additional questions. And you guys, that is all I have. So I'm going to go ahead and stop sharing. And Kate Hansen will go ahead and say a couple of words about herself and move on with the presentation.
Yeah, thanks so much for having us, Olga. My name is Kate Hansen. I am with the Center for Rural Affairs, which I'll explain who we are in just a minute. But have recently been working on this topic of organic crop insurance with a number of great folks, some of whom are on the call, and looking forward to a bit of a presentation and then also Q&A at the end. So Joe, would you like to introduce yourself before we get started here?
Sure, thanks, Kate. Appreciate the opportunity to be here today. My name's Joe Toillion. I live in Jewell, Iowa, which is right in the middle of the state. Crop insurance agent. I own my own agency. I run Iowa, Missouri, and probably other places soon with crop insurance, focusing predominantly on organics and also livestock insurance.
And I will share in a minute, Joe and I have been working on a project along with some other agents and farmers on this topic. So we're going to present just kind of on the big picture here of crop insurance. I think what we're going to talk about would be beneficial if you have crop insurance and just want to make sure you know what your options are, or if you're more of a transitioning producer or beginning farmer. We have a lot of great content here for sort of all different perspectives. So This is the title slide. I hope we're all looking at it. Does that look okay, Olga? Okay. And just a note, these materials are based on a grant with USDA and IFA. So just a bit about the Center for Rural Affairs. We are a nonprofit based in Eastern Nebraska, but we also have 4 staff here in Central Iowa. I'm one of them in our Nevada, Iowa office. And one of the things we work on is crop insurance. We see it as a tool in a farmer's toolbox to manage risk. For some, that is sort of the tool. It's a huge tool. For others, it may be a smaller tool, but we want to make sure that if a certain operation wants crop insurance or wants access, it is available to them. And so part of that is creating educational resources, doing one-on-one outreach, and just making sure that any type of operation kind of has the information they need. And so our newest project is focusing on this topic of organic specifically. We heard from a number of farmers we know and folks in the industry that there wasn't a lot of content specifically for organic. So maybe a farmer was, looking at a whole page of conventional info and kind of only had a paragraph or a footnote or something kind of for them as an organic farmer. And so we wanted to put something together that was focused on that organic perspective specifically. So this is the title page of the guide that we put together. It's called Conversations from the Field, Crop Insurance for Organic Operations. And the 14 folks on this collage here are agents and organic farmers in the Midwest who we interviewed and then kind of put their interviews into this guide. So you might notice that Joe is on here. He was one of my interviewees. Folks in Iowa might recognize Eric Madsen, Ron Miller, Scott Shriver. Those were my 3 Iowa farmers, but we had folks in Nebraska, Minnesota, Kansas, and South Dakota as well. So it was a kind of a Midwest effort, and it's a great guide. This is kind of what it looks like on the inside. So like I said, we conducted interviews with each of these folks and then kind of put together a 1-page front and back summary of what we discussed. And so each one delved into a bit different topic area. With Joe, we talked about things like late and prevented planting, have a little bit of information about him here at the top, where he's licensed to sell crop insurance, which is important when you're looking for an agent. For the farmers, we talk a bit more about what their operation looks like and things like that. But this is essentially what the guide looks like. And when Joe's talking here, and I have a second, I'll put the link to this in the chat if you want to see the PDF version. It's also available too at cfra.org/crop insurance resources with those little dashes in between crop insurance resources. Just a bit of background on this topic today. There are sort of 2 types of crop insurance. There's federal crop insurance, which is administered by the USDA Risk Management Agency. And there are also private products that are sold by your crop insurance company. But what we'll be talking about today is the federal side. That's kind of the major coverage that most farmers are probably using. This is largely federal multi-peril crop insurance, which I think Joe will talk about more as well. But as I said, it's administered by USDA's Risk Management Agency. It's federally subsidized, and this is the kind of base of most people's coverage. When we're talking about private products, it might be something like wind, hail, fire, that type of additional coverage, but the multi-peril is encompassing a lot of different perils. And this is also a really timely topic. So March 15th is what's called the sales closing date, and that's essentially when you have to have the details or most of the details of your policy worked out with an agent in order to buy it for that crop year. And so that is right here upon us. And I'm curious to see if anyone in the Q&A is buying crop insurance and has questions, but this is certainly timely. And it's also timely because there have been a number of changes made to federal crop insurance for organic just in the past decade or so. So prior, an organic farmer really just had the option of insuring at conventional prices. And now there are a number of additional ways to ensure the value out there in the field. that we'll talk about, but this has been changing quite a lot in recent years. So the kind of principal ways of covering that value out there in the field are on this slide. The first are what are called organic price elections. They're available for over 80 certified organic crops, though it does vary by state and county. And this is essentially a dollar value that you're plugging in just as on a conventional policy when you're calculating your coverage or when you're calculating what the revenue, for example, that you're going to cover per bushel. They have a dollar amount, and then you plug that in to determine how much you're covering. And with an organic price, it's going to be higher. This, if you are not familiar with the second one, which is contract price option, you're probably using the first one. That's kind of the more commonly used one. But the second, I think Joe would like to make an argument later that this might be the better option in some cases. This is what's called the contract price option. And essentially, if you have contracts set for a certain crop, you are eligible to insure at that price as long as it's below a certain cap. It's up to 150% of the spring starting price. So you can't, have your friend write you a super high contract price or something and try to pass that off. But this is a really great option, especially if that contract price is higher. It's available for certified organic crops as well as crops in transition, which we'll talk about a little bit later. And even though this March 15th deadline is the one to sign up for crop insurance, you do have to have the option on your policy by March 15th, but that doesn't mean you have to have contracts in hand. You do not need to show any contracts to your agent until the acreage reporting deadline, which is July 15th. So basically in March, you can opt in to add this to your policy, just kind of keep the option open and then decide in July if you want to use it based on what contracts you're looking at and running the numbers. So just keep that in mind. You don't have to make this decision by March. I would just say add it on if you're even thinking about it and just keep the option open for yourself. And finally, this is an option that has been made available in recent years. So this is not, a longstanding option available. And it's just an example of why it is important to keep having these conversations because things in the organic world are changing with crop insurance. And this is the one that when I talk to producers, a lot of them are surprised by or didn't know that this was available because it is a really great option. So Joe, would you like to tell us a little more about kind of these prices and what we're looking at in 2021? And I think you're muted.
All right, can you hear me now?
Yeah.
Yes.
Okay. Sorry about that. Spring starting prices. So this year, this is a comparison of last year to this year. Our prices are higher than a year ago. And so for last year example, organic corn was $8.69 a bushel, soybeans were $18.05 a bushel, and oats were $5.34 a bushel. This year, corn is $9.56 a bushel for a spring starting price. Soybeans are $22.54 a bushel, and oats are within a few pennies of last year. It's about the same. These are the organic prices. So the conventional prices, they are up as well. Organic pricing for spring starting price and fall ending prices are derived from the conventional prices. They just have an organic factor that they multiply times that. So the organic factor stayed pretty much the same from a year ago. They did increase the volatility factor and you'll see that in your premium costs on your policy. The volatility factor, which is a risk factor that the government uses to assess what they should charge you for your insurance, that went from organic corn, from example, went from 0.15 last year to 0.23 this year. It went up that much. So that's a pretty big increase from one year to the next. And what that says is they feel that the corn is probably overvalued. And so, long and short of that is there's probably some opportunity for revenue money on your insurance if the price would drop in the fall. So same with beans. Beans, the factor on beans weren't quite as bad as corn as far as volatility factor, but the bushel cost went up, which is, or not cost, the bushel price went up. And so you're insuring more dollars. Okay, whoop. Prices. All right, so crop insurance timeline, March 15th is sales closing date. That's pretty close to today. And so this time of year is a little crazy. It's kind of like planning season for you all. We got to run around and see everybody, get the paperwork started, signed, all that stuff. You know, and then you have your planning dates for spring. That's coming up. You know, you'll be in the field here in a month or two. July 15th is the your acres reporting date. That's when you have to be certified at FSA office and get me your paperwork by July 15th. We have more time to key the stuff in the system, but that you have to be in there and be certified by July 15th. And then in the fall, you know, you report yields to your agent, and December is the claims reporting deadline for about mid-December is when is the last chance you get to put a claim in for this crop year. Okay, let's talk about APH and coverage levels. APH is your actual production history. Crop insurance is full of acronyms. We abbreviate everything. In fact, there's so many of them, they give us a list every year of the new ones. So I'll try not to speak in tongues. I'll actually say what it means when we go through this stuff. But so actual production history is your crop history. So your APH, your actual production history, is established off of 4 years of a crop. Okay, so not four actual crops, not 4 years. So what that means is if you're starting or if you're adding ground, you can get an average of your production for your APH. If you're new, you start with a county T yield, and every year you have one of those crop years, you would add that, you add your numbers to it, and it's an averaging over 4 years, and it's continually average over the period that you farm that piece of ground. So county T yields, they told us a few years back that we're finally coming up with organic county T yields. Well, they did, but it was the same factor they used before. They take 65% of the conventional T yield per crop per county, and that's what your organic T yield is. It's pretty fair. It's not perfect, but it works all right. So another thing here with organic crop rotation, you know, you all have such a wide variety of crops that you raise. It can take a really long time, several years, to get 4 years of a single crop to have an APH on that specific crop and that piece of ground in that county. So it takes a while. And that's how that works. So coverage levels, they range, you know, 50 to 85%. Premium subsidies, a portion the government pays, is a higher percentage with the lower levels of coverage, and they don't subsidize percentage quite as much as 85. Most people take the higher levels just for the dollars of coverage. So how that would work, if you would, so you would take, to establish what your coverage per acre is, you would take the spring starting price, you would take that times your percent level of coverage, and then you would take that times your actual production history, your guaranteed yield. You multiply those things, and that gives you your dollars of coverage per acre. So here's some example of a couple, some quotes I put up there. This is Hamilton County where I live, and this is certified organic corn. All righty, so this is an example of levels of coverage, but also unit structure and choice. So this is an example of organic corn at 85% coverage and 70% coverage. And then we have optional units, which is, this is revenue protection. So this is optional units compared to enterprise units. So as an example, so in Hamilton County, if you were looking at an 85% level of coverage on corn, county yield is 126 bushels. That's the T yield. 956 is the price, the starting price. So you would take that times your percentage of 85%. So that gives you, your coverage per acre is $1,023.88. So your cost per acre, if you slide over, it's got the subsidy, and the actual premium is your out-of-pocket cost. So that would be $46.99 per acre. And that's higher from a year ago because of the volatility factor and because of the higher starting price. So if you go down to, if you go up one level to where it says 70% for optional units. So we have a 70% coverage level, Hamilton County organic corn, optional units, same starting price, same county T yield. The percentage is 70% instead of 85%. So your guarantee per acre drops down to $843.19, and your cost goes down to $11.34. So that's what your out of your pocket cost. So compare these things to if you want enterprise units. So enterprise units, optional units takes it down per section, per field in your section. Okay. So if you were in different multiple sections and you had different fields, you could have one have a big loss and another one have a big yield. With enterprise units, one would offset the other. With optional units, you would get paid on that one field's losses and still have the big yield on the other one. So enterprise units, when you throw everything together, you get the same guarantee per acre. So an 85% level of coverage on enterprise units. EU stands for enterprise units. You have same starting price, same guaranteed APH, your 126 bushels is your county T yield on 1 acre. So you have $123.88 of coverage per acre, and your cost goes down from $46.99 to $28.70, which that's a big savings. It's a lot of money, but you have to realize that in the variances in organics is probably more than on the conventional side even, but one field can just do amazing and another one could be pretty average, just depending on when your plant date is, when you can get out there and get it planted, whether it's late or early. A lot of times with organics, they'll wait till the later end of the planting date scenario, so you can the later you plant it, the less problems you have with things. But so anyway, that's a comparison of those two things. Also, if one of your fields got hit with a got hailed on, got flooded out, something like that, with enterprise units, it's going to average everything that you're raising in that county on that individual crop and average it together. So one can offset the other. Where on optional units, you're going to get paid for your losses on a per field basis. This next slide is going to be, so we talked about the contract price option. Okay, so with the contract price option, you could take, if we got $9.56 is our spring starting price on corn. If you can get a contract, you can use up to 150% of that. So you could use your starting price is $14.34 per bushel. I mean, if you can get a contract like that, not saying that you can, but we're just showing you an example here, the extreme example. So in this scenario, if you took the same, this is 85% coverage level on corn, optional units, CP right there stands for contract price option, with all the other things in there, the trend adjusted, the yield adjustment, and the yield cup. So you start with $14.34 per bushel times times 126 bushels for your T yield. So you run that up to $1,535.81 per acre. So that's a large increase in your dollar coverage, and your premium goes up some too. But so it's all relative. So that's a way of increasing your coverage right there with that contract price option. It's been around for a few years. It's not talked about a lot. It's pretty beneficial. This year, I think I was talking to one of my guys yesterday, and if you can get $8 a bushel for organic corn right now, you're doing pretty good. But so as far as getting the big contracts, I don't know if that'll be an option. I would recommend signing up for that. It doesn't cost you anything if you don't use it. And if you can pick up a decent contract, even if it's a couple of bucks a bushel or something like that between now and July 15th, we can use that and put that in your policy and actually use that cost to give you coverage, increase your coverage. So it's a really good option. A lot of times on some of the small grains, you can do that. Usually on oats, a guy can get a better contract than what the spring starting price is. I don't know if that's because we don't have a good handle on pricing oats, but that's something there. And sometimes you can get bean contract, get a hot bean contract from somebody. The thing with contracts, you have to remember, and there's typically three kinds of contracts. There's a bushel contract that says you have a contract for this many bushels. There's field contracts, so you'll take everything from this field. And then there's acre contracts, which are just, similar to the field contracts, but that's how they work. But anyway, you have to have a big enough contract to match up with the acres and or bushels that you're going to insure. So you can't get a contract for 100 bushels and have it cover 10,000. I've had that question asked before. So anyway, that one's that. Unit structure. We talked a little bit about units in that price example, that quoting example. So optional units are calculated on a per land unit basis and per section. Individual coverage per section. The premium is higher, as we saw in that example, but your coverage is based off of down to that section, that unit. Okay. Enterprise unit combines all your acres in a county and averages them. And with enterprise units, you have to have more than one section that you're farming in, and there's a split of the ground. It's got to be, I don't know if it's 60-40 or something like that, but anyway, there's an actual split. You have to farm in more than one section, and it's got to be a fairly even distribution of acres between those two. But that has a lower cost, and it includes all of your production. So an example of where enterprise unit would fail you if you did an enterprise unit would be last year. If you farm in a county where the derecho storm went through and pretty much just mowed everything down on its way by, and some of your ground was in the middle of that storm, and some of your ground was outside of that storm, there's a pretty good chance that what you would have raised somewhere else would have done very well, because we had some pretty good yields where it wasn't messed with last year, and that would have been averaged into your losses, and you still would have been paid losses, but it would have been anywhere near close to what you could have gotten on optional units, and it wouldn't have been enough to offset what your premium difference would be. You're talking on $10 corn, if it's $20, an acre cost differences, that's a couple bushels of corn is all it takes to be a big enough loss difference to pay the difference in the premium. Transition is something that can be pretty complicated. The RMA with multiple crop insurance, they've done some things to make it a little easier for some folks. You want to transition your crops in a way that is profitable, because it's pretty painful to go 3 years with organic practices and conventional prices. So a lot of folks will raise different things. One thing you can do is use a contract price option during your transitioning. We'll say you can get a non-GMO bean contract. We can take that and use up to 150% of that bean contract of the conventional price, up to 150% of the conventional price, and actually give you a little more dollars of coverage and not be so painful. Or you could raise things like some blue corn or some other things where you can get a contract from a processor somewhere and get more than what would be just for raising raising organic corn and beans during transition and getting conventional prices for it.
And I think, thanks, Joe, for all that. I'll just
Sure.
round it out by talking about agent and the agent role. In those interviews we did, it was super, it was made very clear to us that having a good agent who knows something about organic or is willing to really sit down with you and talk about your unique operation is really critical to this whole process, especially thinking about the fact that this is federally set information and programs. And so there's no one agent that can offer you something, really different, at least on the federal side. And so you really are looking for that quality of time with them and their expertise and willingness to kind of talk with you one-on-one through your options. And the two best ways probably to find an agent if you're looking are, first, to just ask fellow producers, organic farmers who they work with, if they like them and have good things to say. A lot of this kind of happens word of mouth. But also there's this agent locator tool on RMA's website. If you just Google RMA agent locator tool, it pops right up. And this could help you find someone in your area if that's kind of where you'd prefer to start. But as was mentioned before, really the main requirement is that that agent is licensed to sell in your state. So it doesn't have to be the person right down the road or right in town. If you find someone you click with or that you want to work with, as long as they are licensed in your state, you should be good to go. And with, electronics and the phone and all that, it usually goes over just fine. So keep that in mind. If you don't click with who you have now, or you're kind of looking around, it doesn't have to be super close to you. It can be someone just licensed in your area. So with that, I think we have kind of concluded the content, but we wanted to leave a lot of room for questions if folks had them. I know that's kind of the best way to learn sometimes. So
yeah, wonderful. Thank you so much, Joe and Kate. This was very helpful. I will admit, I personally don't know much about this topic, so this is a very interesting topic to me too. So there are a couple of questions that have come in. One from Billy and Joe, and the first one is, how is the organic APH calculated years 4 through 10?
Years 4 through 10.
Mm-hmm.
Okay, so years 1 through 4 would be, you would start 4 years of the organic tea yield. Year 2 would be 3 years of the organic tea yield plus your year of production. Year 3 would be 3 years of your organic production plus the tea yield. Year 4 would be all of your own production. Okay, so at year 4 is when you have 4 years of your own production. And then after that, it's just ongoing. Every year is put into there. Now this is per crop. Okay, it's per individual crop. So it take, for 4 years, it may take you, with your rotation, it may take you 10 years to establish your own actual production history. That's all of your own. So every year that you don't have a year of production in the 4, they will average throw the county tea yield in there, and that typically goes up every year. So that helps you a little bit. That's how that would work. And then after year 4, it's all your own numbers, and continues with that for 10 years after that. So, which in organic rotation is a long time, 10 crop years.
Yeah. And Joe, does that answer your question? It does. Okay, perfect.
Okay, thank you.
Excellent. And then the next question is actually from myself, and you were discussing the operational units versus the enterprise units, Joe.
Yes,
So
optional units.
optional. Oh yeah, optional. So what is it? I mean, would you recommend one versus other, or would you recommend getting both? Like, what is like the majority, or what's the best option?
Okay, so per county, you have to pick one or the other.
Okay.
Per crop. So you could have your enterprise, if you're raising corn and beans, you could have your beans be enterprise unit, your corn be optional. So I would look at it this way. So if you're let's just say you farm 500 acres and it's relatively close together, and it's in some sections that are right next to each other, I would probably steer you in the direction of enterprise units, just because they're close together. They're all going to be affected mostly by the same environment. They're probably going to be planted closely together, that kind of thing. And it's going to save you a large amount of premium. It's going to cut it in half, in some cases. But if you were spread out, and let's say you farm 5 miles, your home farm is in the center. You got a farm that's 2 miles south and a farm that's 2 miles north of where you live, and they're spread out and really could be affected, independently from each other. I would recommend that you probably look at optional units for that instead of enterprise units, just because when you're spread out like that, those two things could really offset each other, because it could be, number one, it could be different soil types, it could be different quality of ground, which is a big deal on yields. And it also could just be, one area could, we saw that, over in Greene County this year. If you lived in a part of Greene County that really got some nice rains, and some of it was drought almost the entire crop year, and then derecho came through on top of it. So some of those places, that ground, those crops would burn up before the storm ever showed up. So situations like that, if your ground is spread out, probably want to look at optional units. If it's fewer acres, or if they're very close together, enterprise units is going to take care of you quite nicely. So I look at that on a per individual basis, a per farm basis. You know, I think that's the best way to do it. You know, I don't have a preference for either one. Either one have their own applications, and they're both very beneficial. But when you're signing up for crop insurance, you definitely want to make sure that you cover your risk. That's what it's for. You buy crop insurance so you can sleep at night. And the worst time to find out that enterprise units failed you is in the fall, when you find out that your claim isn't going to be anywhere close to what you thought it was going to be, because one field averaged in with the other and offset it. So yeah.
Gotcha. Okay, that's very interesting. Thank you for elaborating on that.
Sure.
So Kate has posted the guide that she mentioned. It's on CFRA.org/crop insurance resources. So be sure to check that out. It's in the comments section here. Billy and Joe have another question for you. I believe you, Joe, is in what circumstances do you recommend whole farm insurance?
Okay. That's a good question. I thought that would come up probably first. So whole farm insurance is a revenue-based policy that takes into consideration your farm as a whole. So if you raise corn and beans and oats, and you sell some hay, and you've got chickens, and maybe you got a greenhouse, and maybe you're, Christmas tree farm, those kind. If you have a very diversified operation, an orchard of some kind, you're raising some grapes, you're raising, maybe you're raising wheat and it's not covered, by federal crop insurance in your county. Those things, that's where whole farm can be beneficial and take into your entire operation. What it does, it takes, I think it's 5 years of averaging. It takes your Schedule F off your tax returns, and each year stands alone, and then you average it together, and that's your baseline for what your losses are calculated against. Okay, so that's how that works. There are some areas of whole farm that are a little tricky. The feds are not great at calculating values for things. So example, if you all of a sudden added 100 cows to your operation, and you got that expense and that income, that revenue, they don't have a value of assessing that very well in your average. So it may not represent it greatly, but it's they're working on it. I think it gets better every year. I liken it to how when they first offered, organic crop insurance, they didn't have a very good way of organic factoring for prices and things like that, but they figured it out in time. So the thing with premium, so that's how it works on how do I get paid on whole farm. Okay. The premium side of it, you want to look at whole farm as supplemental if you can to your regular multi-peril crop insurance policy. It'll be much less expensive if you use it as an add-on. Okay, so for example, your premiums on whole farm, if you have what they call certified crops, if you have 3 certified crops, which are crops that you can insure through regular crop insurance, your premiums are going to be much less. So if you're raising organic corn, it doesn't even have to be organic. A lot of people that are raising seed corn conventional use these kind of policies because they can't get taken care of very well. So if you have 3 crops that are actual insurable crops with multi-peril crop insurance, your premiums on whole farm are going to be substantially less. So if you have corn and beans and oats, or something like along those lines, it's very, very affordable. Or if you even have 2 or even 1, it's still very affordable. If you just look at whole farm as replacing what you're currently doing with all of your insurance needs, it's going to cost you an arm and a leg. And it might be one of those deals like I talked about before, about you don't want to find out that you're not covered at the end of a season when you think when you have a hole in your revenue. So I would definitely look at it as something that is supplemental to the existing things that are available through multi-peril crop insurance. But if you're if you're a small producer and you're selling a lot of different things, and that's all there is, I mean, definitely look into it. Look at the cost versus look at what you're getting versus what you're spending is probably the best way I can put it.
Gotcha. Billy and Joe, sounds good. Does that answer your question? Good. All right. The next question comes from Cheryl, and she says, what is the difference between supplemental coverage option and enhanced coverage option?
Okay, at SEO, and those are some of those things that are private products that were added on. I believe that's what she's asking. Some of those don't even apply to organics. Most of them don't. Some of those products, the private ones especially, they cost a lot, and the way they're calculated. I really don't. I look at them all each year, and I don't really sell any of them, just because. And I'm not a great resource to ask that question to, actually, because I mean, I've looked at it at meetings and tried to evaluate those things, but so like stacks and ramp and SEO and NCO and all those things. Basically, those products came from an environment in the industry going back maybe 7 years. The feds took all the profit out of crop insurance from a company standpoint, and from the, I mean, for agents, they cut our commissions. They cut them 60% in 1 year, from year to year, and so and the industry took the same hit. You know, the insurance, the underwriter companies. So what they did, they started making these private products that they get better margins on, and some of those things. So that's how they kind of trickled in. And I'm not a huge fan of them, and I don't know if they even apply to organic production. I've never looked at it from the organic side. That, you know, conventional side, there's some of those things out there, but probably the best private products for organic producers would be wind and hail insurance. And wind insurance is probably something that's going to be, after Duratio went through last year, it's very expensive. They may not cover organics on wind. Some companies, those are private products, or company to company as well. Hail is something that's, you know, something beneficial, very beneficial if you live in an area that typically has hail claims. And you'll know if you live in one of those areas by how expensive the premiums are. They're more expensive in counties that get hit often with hail. And some counties even have 3 tiers of pricing for hail coverage. So, but they're beneficial. There's a lot of different options with that. And, you know, with organics, the thing with hail policies, most hail policies aren't yield-based policies, they're dollar-based policies. So you buy $300 of coverage per acre. And then they evaluate when you get adjusted. If you have hail, they look at the percentage of loss, take it times your guarantee. An average hail loss is 35%. So if you so to get $100 of actual, you know, paid coverage, you need to buy at least $300 of policies. Kind of how that works. And then with organics, a lot of times people will buy, you know, $1,000 of coverage per acre, $2,000 of coverage per acre, just to ensure the dollars that they have in the crops. But yeah, I'm probably not a great resource to ask about SEO and NCO and those other ones. But.
Okay. Well, thank you for elaborating on that. I'm sure,
Sure.
you know, it was helpful to just get your opinion on that.
Yeah, sorry about that.
Oh, it was great. Thank you. So the other question comes from Aiden. And can you explain how revenue insurance works and the fall price option?
Revenue insurance and the fall harvest price option. So those quotes that I put up there were revenue protection. Okay, so all of multi-peril crop insurance, all those policies where it is conventional or organic, we'll stick with organic because that's our audience. It is based off of when you have your actual production history or the county T yield or a combination of those things, you take that yield guarantee times the spring starting price and times your level of coverage. So that is your dollar amount per acre. So revenue protection is that dollar amount against perils that are God-made perils, not man-made perils. So God-made perils are rain, hail, drought, wind, you know, anything that the world can throw at you that's not caused by, let's say, your neighbor, you know, putting dicamba, you know, 100 yards away from your bean field and it all dies. That's not covered by federal crop. If your neighbor's combine starts on fire in his field, it jumps your fence and burns up half of yours. That's not covered by federal crop. Those are man-made perils. So anything that happens to your crop, that's what that revenue base covers that I just talked about. So the fall harvest price option is something that everyone should always have, because with the fall harvest price option always also covers revenue, okay, price drop. So you could not have a claim based off of based off of apparel, but if the price of the crop falls, your crop insurance will cover that on the revenue side of it. So for example, those prices I quoted earlier with organic corn is $9.56, or in organic beans are $22.54. The way they came up with those, the month of February, they look at December corn on the board. So the month of February, they have a settled price each day that it's traded, and then they average that at the end of the month, and that's how they come up with your spring starting prices. They do that December corn and November beans. Okay, so fast forward to the fall, in the month of October, they're going to do the same math, and they're going to take December corn, they're going to take the settled price every day during the month of October. Every day that December corn is traded, they're going to make a record of that it's settled on a daily price, and they're going to average it at that time, end of the month. They do that the same for beans. So those are your fall ending prices. So your coverage is based off of your spring starting price times your guaranteed yield times your level of coverage. That's how they come up with your spring starting price. Your fall ending price, they do the same thing, but they take what you actually harvest times the fall ending price times your level of coverage. So they take those two numbers and subtract one from the other. And if it's a red number, if it's a negative number, that's the amount you get paid for a claim. That's how they do claims in crop insurance. So I just see a question came across.
Let me read it, Joe, just so that we have a record of it on our recording. So the next question is, can you comment on USDA program PLC versus ARC co-options?
Yeah, so PLC and ARC are two, they're disaster payment programs. What they do is, one is based off of kind of county yields, and one is based off of price. So basically you look at your crops, and if you think that the price is more volatile than production, you pick one or the other. A lot of folks picked ARC this year. I believe ARC is the one that's based off of production, or maybe PLC is production. But anyway, this year probably price is probably an issue, especially on corn, because they have a higher volatility factor than I've seen in a very long time on corn, and beans is lower. So one may work for one or the other, but basically on corn, probably a price drop is probably something that's realistic to happen. I don't know. But and on beans, they've got a lower volatility factor, so it's probably more production potential against beans and price on corn. But that's just kind of what, and I would agree with that, but that's kind of what you hear in the industry and the experts are talking about. And then you'll find somebody else to tell you exact opposite. So yeah, sorry about that if I didn't give an answer very well.
Thank you for sharing your thoughts on that. And then another comment that's being requested by Billy and Joe. Can you please comment on ARCIC?
ARCIC, that's ARC, I believe. I don't know what the IC is. What's the IC stand for?
Yeah, Joe, do you want to? You're on mute.
Individual farm.
Yeah. Sure. Oh, individual farm versus county.
Yes.
Yeah. So if your individual production, if your individual numbers are better than what the county average is, you probably want to look at your farm independently. If you're at or lower than the county average, you probably want to look at the county average one.
Okay. Thank you.
Sure.
Excellent. And I believe that is all the questions that have come into the chat box. So
do we get that revenue question answered properly? I kind of rambled on about that one.
Was that the one right before the last one?
Yeah, revenue and fall harvest.
Oh, the revenue and fall. Aiden, if you want to unmute yourself, did that work as a response for you, or do you still have follow-up questions on that question? Aiden is the one that asked the question. I'm not hearing anything from Aiden.
So I kind of.
here, it sounds like. Okay, Aiden, if you want to confirm.
Yeah, I think that kind of explained it. So yeah.
Okay.
So the fall harvest price option, I didn't get into great detail with that. You can pick a policy that has that excluded, and it's going to be a little less cheaper on premium, but it really takes a big portion, especially in a year like this where the prices are higher than we've had in some time. Taking the fall harvest price exclusion will save you a few bucks in premium, but if we do get price drop, that could cost you a lot more than what that savings would be.
Okay.
Thank you.
Sure.
Okay, thank you, Joe. All right, well, if there are any additional final questions, you guys feel free to type them into the chat box, or, unmute yourself out and ask Joe or Kate. Otherwise, I'll thank you for attending our webinar today. We really appreciate your time and are happy to have you here. As part of our grant reporting process, I will be sending you guys an evaluation survey. So if you could please take the 5 minutes to fill it out and send your responses back, that would be greatly appreciated. In addition, I will be posting this recording on our YouTube channel. For those that want to revisit some of the topics, or if you'd like to share this recording with anyone that could benefit from this information, that would be great too. So definitely stay tuned for an email on the evaluation as well as a recording. I'll try to either get it done by the end of the week or early next week. So be on the lookout for those 2 items from me. And I don't see any additional questions. So Joe and Kate, thank you so very much for being here today. We really appreciate your time and all of the knowledge on this topic. Feel free to reach out to Joe and Kate if you guys have additional questions, and myself included. So thank you everyone for being here today, and wishing everybody a great day.
Thanks for having us.
Of course.
Thank you.